Hey, how's everyone doing this evening, this morning? Hope everyone's doing okay. Can you let me know how the sound's coming in for you? Thanks. Okay, we started in just a bit. Hopefully the sound's coming in okay for you guys. Um, be with you shortly. Victor, how you doing? Max Strong, how you doing? Polynesian Pip, what's up? How's it going? Seymour Rivers, thanks. Nicholas, Nasty, glad you're here. Yes, there are saddles in Singapore. Be with you guys shortly. Hold on tight. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, and hope everyone had a great weekend out there. Hope your evening is going good, or I hope your Monday morning here in Asia is going well as well. So glad to see you folks here. Quick roll call. Samari, how you doing? Thank you. Bobby Jones, Anna Maxa, thank you. Etija Scott, first time I've seen you here. Welcome aboard. Yeah, if you are new here, go ahead and type in new and where you're from, and then we'll see if we can go ahead and acknowledge you. Again, thanks for being here. Carrie Ellen, Victor Claudio, Toker Talk, Tanya, how you doing? Let's see. Okay, JJ Sneed, Kentucky. First time I've seen your name here as well. Silver Slave 333. Six. I'm going to assume you're pertaining to that Peter Schiff interview when he was interviewed by that Australian journalist. Wasn't that pretty wild? I didn't have time to go ahead and get the clip, but I'm pretty sure a lot of you have seen it already. So it's going to be a topic for sure, either tonight or tomorrow. You guys will be talking about it, guaranteed. Okay, so let's see who else is out there. New St. Louis, MS Bishrod 99, I guess. How you doing? Glad you could be here. Mark Mays, new from Oklahoma. How you doing? Oklahoma, oh, it's a ways away. Okay. Oh, yes, new from Louisiana. Great. Glad you could be here, guys. Appreciate it. Shaf San, good morning. Appreciate you guys being here. Just trying to get caught up with some things here. Let's see. Scott, Guifrida, new comment, long time viewing in Brisbane, Australia. Thanks for joining up, Scott. Appreciate that you're here. So again, if you are here for your first time, or if you haven't already done so, don't forget to subscribe, hit the bell to be notified on updates, and give us a thumbs up if you like what we do. We really do appreciate your support. Really do. And as always, you can find us on social media. silverbullion.com.sg is our website. We are a bullion dealer, but we specifically, our specialty is systemic wealth protection. And again, as you guys know, there are a lot of things going on in the world right now. A lot of things that are looming over the horizon, and a systemic crisis is on the minds of a lot of people. And if you are aware of that, then you may want to go ahead and visit our website, where we do specialize in systemic wealth protection. We have a lot of tools that can help. Silver Bullion SG is our Facebook handle. Silver Bullion PL is our handle on Twitter, PL for private limited. Audio versions, bit.ly, bit.ly, SBTV iTunes, or SBTV Spotify. And do join our Crisis Tracker group, where we do post some really great articles pretty much every day as it pertains to precious metals, gold, silver, economy, finance, things like that. So do go ahead and join our Crisis Tracker group if you have that Telegram app. If you don't, go ahead and download it. Telegram's a pretty good app, so hope to see you guys there. So let's see what else is out there real quick. Let's see. Marilyn here. Manoj Poon, welcome aboard. Pablo Pino, welcome aboard. Hey, I'm looking for Pabar and one Royal Wolf. If you're there hiding, we need your email addresses so we can go ahead and send you your ebook. So um, hopefully we'll run across your names here. Pabar and one Royal Wolf. We'll be looking for your name as well. Need to get that email so we can send you the book. Always be funding. Who's ready for Stock Meltdown Monday? I wish I had more time to dig into this. I think you're talking about that that LIBOR thing going on where they're going to transfer over. Um, it's I just started reading on it, so I don't want to comment too much on it because I gotta fully understand it before I want to talk to you folks about it. So there is something going on that's going to happen over the weekend, and I think Lynette Zhang, she has a pretty good video out on YouTube about it. So go ahead and take a peek if you can. It seems pretty important. So I wish I had time to check up on it, but I didn't. So I'm pretty sure you guys know more about it more about it than me at this point. One Royal Wolf, I see you there. Yes, can you we'll have Vincent go ahead and mute your comments, and then if you could send your email to us so that way we can go ahead and send you your book. I was trying to find it. I couldn't find your email. I know you've won before, but we'd appreciate that so we can go ahead and send you your copy of Build Your Own Bank by Aon Schmidt. It's a good book. And Pabar, if you're out there, we need you to let us know your email as well. Okay. Okay. So let's move on. Our upcoming guest this week is going to be Frank Holmes, CEO and Chief Investment Officer of U.S. Global Investors, which is a boutique investment company, or he's a boutique investment advisor specializing in emerging markets and natural resources. Frank Holmes, he's always a colorful guy, and we appreciate that he gave us time, and he's going to be on board, and so we'll be talking to him about some things, and he has a pretty interesting ETF called JETS, JETS. That one looks pretty interesting, so we'll get him to talk about that a bit. Let's see what else is out there. Okay, okay, one Royal Wolf. Okay, thanks. Thank you, one Royal Wolf. Carmen Kaich, Vancouver, how you doing? How you doing from Canada? Thanks for coming on board and joining us. Victor Claudio, yeah, this is kind of what I understand about it as well. It's complicated. It's some $80 trillion derivatives transactions. Some expect the end of the financial world tomorrow. I'm not sure if it's going to get that bad, but I do know that they're talking about revaluation right now, and that's why I want to know more about what exactly is going on, because whenever we hear that word revaluation, it can be something pretty important, right? I mean, we all have most of us, we have mortgage loans and things like that all wrapped up in other financial instruments that are being tossed around the markets right now. So when they're talking about things being revalued, it can really hit home, literally. So we need to see what's going to happen with that. Um, John Michael Karma, yes, Frank. He also leads the directors at Hive. Also, Hive is pretty interesting as well. It was I think it's still doing okay. It was doing really, really well. I'm not quite sure where it's at right now, but I think it's still doing okay with the things he's doing over at Hive. So, having said that, let's move on. One Royal Wolf, yes, gold-backed digital currency coming. That seems to be what a lot of guys are talking about right now. Okay, so Pabar, if you're out there, Pabar, we need your email, okay, so we can go ahead and send you the book. And we're going to send out this book. It actually is a very good book, and I think it's pretty significant for where we are right now. Why Gold, Why Now by E.B. Tucker. It's the war against your wealth and how to win it. Investment industry veteran E.B. Tucker shows readers the gold market from the inside. It's a 3-part book breaking down gold into 3 must-know sections. Why gold, why now, and a gold market how-to manual. So these 3 topics, it's more than just these 3 actually, but I think it's very important for all of us right now to know these 3 things: why gold and why now. So E.B. Tucker, this is going to be given away to the first person who can go ahead and answer our question coming from Max Keiser, or the interview last week. House rules: download the Kindle app from your phone or tablet's app store. It's free. Okay, so go ahead and download it. Be the first to answer correctly in this live stream before the timer runs out. Okay, so you have to do it in this live stream before the timer runs out. U.S. winners will be given a link to download the ebook. Winners outside the U.S., you'll be offered a alternative prize at our discretion. And you're going to have to provide us an email during this live stream. And what we'll do again is my colleague Vincent is standing by. He will mute your comments, so that way when you send him your email, then no one else will see it except for us. So we'll have your email. Okay, so having said all that, the question, which is coming from Max Keiser's interview last week, is, according to Max Keiser, a new central bank digital currency won't work due to its blank nature. So according to Max Keiser, a new central bank digital currency will not work due to its blank nature. Yes, it's final Jeopardy. Go. Okay, so here we go. Yes, Max Strong, E.B. Tucker. He's, I tell you, he's good. He's very, very good. Okay, so here we go. We're looking for the first person. In fact, we'll look for a few more people who get it right, and we'll be giving away an extra secondary prize. Okay, so see some answers coming in. So we'll let the timer go down. Okay, see some answers coming in. Okay, we see a few correct answers. Okay, so let's see. All right, so timer's running down. We do have a few correct answers, which is good. The first correct answer, we're going to give away the book, Why Gold, Why Now? And then for the runners up, we're going to be giving away that Build Your Own Bank by Aon Schmidt. So I guess what we can do is we'll go ahead and we'll get the answer from Max Keiser. The answer from the man himself. Centralized.
They are now aware of the fact that they are losing control. And in fact, they are losing control, and in large part because of Bitcoin. And their solutions in terms of coming up with their own digital currency alternatives won't work, because by the nature of those projects, that'll be centralized. So it really won't be much different than the current fiat system.
Okay, so there we go. The word is going to be centralized. And for that, first one who got it right was Silver Warrior, centralized. He got it right first. So we'll go ahead and we'll get your email. We'll mute your comments, and you can go ahead and give my colleague Vincent your email, and then we'll be sending you that book by E.B. Tucker, Why Gold, Why Now? So from there, from Silver Warrior all the way down to Theta, I believe it was. So Silver Warrior, we'll get the E.B. Tucker book. And then we're going to be looking at Rusty Shackelford. Hang on, I'm going to have to write this down. A few of you guys got it right. So I'm going to have to be tougher on you guys next time around. The questions are too easy, huh? Okay, so Silver Warrior is one. Then we had Rusty Shackelford. Okay, then we had, let's see, Hidden Numismatist. We're going to need your email as well, Hidden Numismatist. So what we're going to do is go ahead and mute your comments so we can get your email as well. And then we had One Royal Wolf. Again, got it right again, centralized. Okay, and then we had, let's see, I think there were a couple more. Max Strong, centralization, close enough. Max Strong, we're going to need your email as well. Sorry, guys, just let me get through this. And then we're going to need Bay Creek History Detectives right below Max Strong as far as the comments. And then I think there was, let me see. Yeah, there was down to, let me see. Sorry about that. After Max Strong, we have Mike Henley. We'll need your email as well. Mike Henley. Shane Lackey. We're going to need your email as well. So hopefully Vincent's, he's catching up with all this. Mike Henley will have to mute your comments so you can send your email. Shane Lackey as well. We're going to have to mute your comments so we can get your email as well. And then the last one was Theta One. Theta One also. So we're going to need your email as well. So we'll mute your comments and you can go ahead and send your email. So all the way to Theta One. So from Silver Warrior, Who Wins the Book by E.B. Tucker, all the way down to Theta One. Those are the people who won. So again, we appreciate you guys playing the game. Man, a lot of winners out there. So congratulations. Okay, so moving on. Sorry about that. It's you guys are smart, making us work harder here. So moving on. Let's see where we're at. Let's just go over to the website. Sorry, guys, I'm just trying to get organized right now. So let's move over to the website, take a look at the silver price and where we are right now. Let's see. US dollar silver 24.24, down 4 cents, not much change really. Gold is the same, not much change. I mean, not much change. It was jogging a little bit above 1900, and it just kind of went back down under just a bit. So it's not really too bad. No change really. Investor kit. Come to our website, www.silverbullion.com.sg, and just click on this and you're going to get a free investor kit. A lot of good info as always. I try to express this to you guys where you should go ahead and just take a look at it, especially things that we have to offer, like borrowing or lending with secured peer-to-peer loans. This is pretty interesting. Investing in electric vehicle batteries. We talked about nickel last week, how nickel was doing. And the bullion genuinity guarantee. What you buy from us, we are gonna make sure that it is real, and you're gonna know that it is real, even if it's stored in the vault. If you are storing in a vault, why don't you maybe ask your vault the question of if they are testing your gold and silver to make sure it's real. Not very many vaults do that. They're just gonna assume it's real, and unless you test it, you may not know what you're storing there. And so sign up here. It's free, no maintenance fee, free to do. And these are the peer-to-peer loans, again, where if you do store with us, you can go ahead and use your silver, your gold as collateral to be used as a secure peer-to-peer loan. What this is, some people store and they want to reinvest. What they can do is go ahead and take out a low interest secure peer-to-peer loan using their gold and silver as collateral, and they still own it. You still own your gold and silver. You're not giving it up in any way. So you can go ahead and take out a loan or look for a loan. And then we have people who do lend money, and this is growing more and more. The reason being, with rates being so low, guys are looking for a little bit of yield here and there. And so what they'll do is they will lend money to this program, the peer-to-peer program. They will lend money, and all we are is just a platform. And we make sure that there is gold and silver behind it. And then what will happen is they will lend money to guys who want to borrow money. So it's a secure loan. And for this one, lending money, you don't need to be storing any gold and silver with us. But to borrow money, yes, you need to be storing gold and silver with us. So it's really a great program. More guys are coming into this. They're looking for yield. If your bank's not doing it for you, this may be something you want to take a look at. Gold and silver ratio back under 80, which I feel is pretty good. I think most of us might feel it's pretty good. We're back under 80. It's really been rough with this ratio. We've seen it go from 125 roughly all the way down to low 70s, high 60s. It's really been moving. Silver is volatile. This is exactly what we mean, but it still is a time to be buying silver. So if you're kind of on the fence still between silver and gold, the ratio might be one deciding factor that can help you through it. Moving on to Twitter. Some things that I bookmarked. Overvalued. This is not me saying it, okay? This is the article. Young, dumb traders have created a total nightmare in the stock market. So let's take a quick peek at this. Okay, so young and dumb traders have created a total nightmare in the stock market, fund manager warns. I think some of you may be thinking it's the Federal Reserve that's created the nightmare in the stock market, but no, it's not my article. This is from Market Watch. At 40 times earnings, there is 0% chance that Microsoft stock will produce wealth for someone over the next 10 years to meet their needs. Okay, are we getting this? This is what we mean when we say the market is overvalued. At 40 times earnings, there's a 0% chance Microsoft stock will produce wealth for someone in the next 10 years. The buying that went on in August and September is a 10-year phenomenon, the likes of which we've never seen among millennials and in the risk taking among people that don't want to own bonds and want to own overpriced U.S. quality businesses. It is a record proportions. Okay, so let's see. Smead went on to say that these nosebleed valuation levels are an example of stock market failure at the hands of these inexperienced millennials who have gotten lured into taking oversized risks in equities for the first time in their lives. Um, again, I would backpedal a bit. A lot of it has to do with the Federal Reserve right now, pumping up the markets. A lot of zombie companies out there. Microsoft definitely not a zombie company, but when these valuations really, really go way over, there's a bit of FOMO going on, and people want to rush into it before they miss out. But again, 0% chance of Microsoft stock producing wealth for someone in the next 10 years. Okay, so I think something we need to kind of keep in mind. Greg Manarino, and this is what a few of you guys were talking about, 80 trillion debt reset. Seems like many of you are expecting a market crash over this. Where is that coming from? It's funny to me when people point to an event and say, this is it. 99% of the time, just the opposite happens. And fortunately, I can't get on the article, but again, it's about LIBOR and SOFR. So this is something, if you can, go ahead and take a look at that Lynette Zhang video on YouTube. She explains it pretty well. I haven't had the time to really take a deep dive in it, but this is pretty important stuff right here. Take the time to look at it. From Blacklisted News, U.S. budget deficit triples to record 3.1 trillion in 2020 as U.S. spends 90% more than it collects. Are we getting that? U.S. is spending 90% more than it collects. That can't be a good thing. Not at all. So let's see if we can pull something out of here. Let me make this a bit larger for you guys. Okay. Okay, so there's the title. U.S. budget deficit triples to record 3.1 trillion in 2020 as U.S. spends 90% more than it collects. Those who have been following the record surge in U.S. public debt, excluding the roughly 100 trillion in off-balance sheet obligations, which exploded by 3 trillion in the 3 months following the bug shutdowns, and which just hit an all-time high of 27.1 trillion this past week, will be all too aware that the U.S. budget deficit this year and every year after will be staggering. Again, these are reasons why people or countries are getting out of the dollar. It's just not a good time. The debt is just incredibly overwhelming right now. So let me see. I guess it's kind of all they had on. Oh, read more. Sorry about that. So let's see if we can get a bit more info. It doesn't look like it. So anyway, it's just to say that U.S. spends 90% more than it collects. It's there's a lot of things looming on the horizon right now that do not look very good. We just need to be aware of it. Jeb Hanwerger, negative rates causing long-term value investors like Warren Buffett look to gold as their crisis hedge, especially gold miners like Barrick. Gold ETFs have taken in 32.5 billion this year, blowing away the old annual record of 12 billion. More to go into mine development. And this is one thing that I think we're going to talk to Frank Holmes about where the money is going. This is something pretty unique right now. It's not just the ETFs that are exploding. We've also seen the physical gold side of it exploding. A lot of you guys have been buying more and more out there. So don't get discouraged if all the news comes from the ETF. arena because we can tell you that a lot of guys are jumping into physical as well. And later on, we're gonna show you a few billionaires who have actually made the move into gold, whether it's ETFs, whether it's mining stocks, or whether it's physical bullion. So you are in good company. William Middlecoop, never in the last 2 years have we seen more reset news than in the last 24 hours. This has to do with that LIBOR, SOFR news again. A monetary reset is a set of events over a period of time and not a binary one. Only in the rear view mirror, a monetary reset can be recognized clearly. So this is just to say that there's more news out there, more birds are chirping that, guys are really talking reset, reset, reset. John Solomon, he's always got interesting news. U.S. Postal Service truck stolen in Washington, D.C. The postal truck stolen. This is one reason why, maybe mailing in ballots just might not be a good idea. There's just too many things that go between you and your vote. So if you are going to vote, I mean, it's good, but be responsible with it and make sure your vote is secure. So this is just to say that more really amazing things are happening in the states where now even postal service trucks are being stolen. You just don't know where this is all going to lead to at this point. Um, Another article, federal officials call for tougher regulations to prevent asset bubbles. Well, the thing is, they may be the ones who are creating these asset bubbles. So sometimes, you got to police yourself. You got to take a look in the mirror and understand what you're doing. Uh, Gold Telegraph, as I have laid out for years, gold is on its way back to monetary policy in a direct way. The IMF confirmed they will not sell gold reserves. Now they are calling for a new Bretton Woods arrangement. This one here, it's kind of lengthy, but what's going on is it's just to say the IMF is recognizing that a new, we have to do things over again and in a different way. So they're kind of likening it to Bretton Woods. They did not say gold or gold backed. So when I say Bretton Woods, I don't want to mislead you to think that they're talking gold. They did not say gold. They're just saying that things need to be redone and reworked. Whether that's going to include gold or not, you can read into it how you want to, but they are saying they are not going to sell gold reserves. So, there could be a role for gold with what the IMF is trying to do. Gregory Manarino, dump dollars, buy silver. And that's coming from Goldman Sachs. So let's take a look at that article if we can from Zero Hedge. Goldman Sachs, dump dollars, buy silver. Okay, that's pretty interesting. So Peter Schiff, I know you guys have seen it already. His interview with the Australian journalist. Peter Schiff has been warning about a dollar collapse, and now mainstream media is even getting bearish on the dollar. Okay, so let's just take a quick look at this. In response to the economic shutdowns imposed by governments to deal with the bug, Federal Reserve is printing money to infinity and beyond. On top of that, it has shifted its inflation targeting to allow inflation to run hot, meaning there's no end in sight to the currency debasement. Okay, currency debasement. This is bearish for the dollar, and an article published by Reuters last month quoted a number of mainstream analysts talking about the dollar woes. Goldman Sachs has jumped on the bandwagon, saying in a recent report that the risks are skewed toward dollar weaknesses. Analysts see an increasing likelihood of a Biden victory in an upcoming election. Okay, so this is one. I guess there's a lot of uncertainty. There's always been uncertainty, but let me get to the main parts here. The dollar is going to fall through the floor, and inflation is going to ravage the U.S. I think most of us would agree with that. What's about to happen is that the world is going to go off the dollar standard and go back to the gold standard. That's where we're headed. And so moving on, keep in mind, dollar weakness is also bullish for both gold and silver. In a separate report, Goldman analyst Mikhail Sprogis said or recommended buying silver. He said the white metal is an obvious beneficiary of the global move toward solar energy. So he's looking at it from the industrial side of silver. Silver is a vital component in the solar energy sector, and solar power generation is expected to nearly double by 2025. A report by the Silver Institute produced, and they projected that a combination of global efforts to reduce fossil fuel reliance, legislation to lower carbon emissions, and a favorable government tax policy should result in continued expansion of solar panel installations over the next decade. A recent report from the World Bank forecasts that by 2050, consumption of silver and energy technologies could grow dramatically, reaching a level equivalent to more than 50% of current total silver demand, the largest proportion by any non battery metal. So now with silver at $24 per troy ounce and a few potential upward solar surprises in the coming months, we reopen the trade. A lot of us, here we still do see silver having perhaps a monetary component, a wealth protection component. It's more than just a solar component. Silver is monetary metal. It's a precious metal. It's a industrial metal. So it has various roles to play. Um, James Anderson, yeah, if you think $2,000 gold is cheap, you don't know gold. And of course, this is just a projection of gold prices to go quite a bit higher. So those are some things on Twitter I want to take a look at. Pretty interesting stuff. Let me see your comments here. Hang on, let me go through it a bit. Let me see. Okay, so yeah, actually, a lot of you, yeah, we were just going to take the first five for that book. A lot of you guys did well. Um, let's see. Congrats to all. Wash hands. Okay, it's my colleague Vincent there. Um, okay, Shane W, welcome aboard. Hello from Indiana. Okay, okay, so let me move on. See if there's any comments I want to pull up. Sorry guys, I just want to make sure I'm up to date with you guys. Um, okay, I guess okay, everything's good there. Let me move on then. Okay, so what I want to do is go back and take a look at a few things that Max Keiser said. Um, I was pretty interested in seeing the response that the interview with Max had. The intention was really to help us understand that as one of our past guests put it, we have analog gold and we have a so-called digital gold. The physical gold being the analog gold, and the two. I think you know there's a role for both to play, and so we were hoping that we'd bring Max on and he would help to sort of create a bridge, between the crypto guys and create a bridge for the physical gold guys to help each other understand that there could very well be a role to play. It doesn't have to be one or the other when the both can in fact complement each other. So I found it pretty interesting that a lot of you guys didn't really care for that interview. You expressed it in your comments. But again, the intention was for us to really take a step back and look at things from a different perspective and see how the two actually can complement each other. But you have spoken. So a lot of you guys weren't happy with it. But anyway, let's start playing a few clips from Max Keiser. So he spoke on a few of quite a few things, but I want to go over three of them: printing money, deflation, and globalization. So here's the first clip.
The problems that central banks have been involved with by overplaying their mandate. Central banks, instead of being a lender of last resort, they become activists, and they've decided that they become political, and they've decided that they should try to manage the economy from their central authority, and never works ever. And so they kind of destroyed themselves in a lot of ways by taking on the world's problems with their only solution that they have, and that is to print money.
Okay, so according to Max, central banks cause problems. And it was interesting with the article I just showed you how traders were saying it was the Robin Hood guys causing problems. But Max says central banks cause problems. And I I agree with that. I mean, they do help. Of course, they do help in some areas, yes. But at this point in time, or this point in history, they are helping to a point where that asset bubble, that the bubbles just keep getting bigger, and which means it's going to be a bigger pop. So they may be adding a little bit of fuel to the fire that's going on. He says they overreach, which we've also talked about before. They have a mandate, a specific mandate, which would be price stability and maximum employment. And anything else outside of that, you got to question. You know, or you got to question, and even within that mandate of maximum employment and price stability, it contradicts itself. And we've also gone over that, how it contradicts itself. It's almost an impossibility for the two to work without throttling the economy back and forth, which throttles your bank accounts, which throttles your job situation. So, the Fed is they have a hand in a lot of things that we may or we may not know, and their only solution is to print money, which no matter what they call that program, it's a program of printing money, and I think a lot of us know that. Um, so let's see what else is out here. Um, yeah, Max, he was on Wall Street before, so he kind of knows, or he does know. He knows how it works inside and out. Um, let's see. Scott with Frida. Yeah, Max, he's a smart guy. I find he challenges your thoughts, and as a few days ago, by your irritation turns to awakening. Damn you guys. He in the interview, if you watch it, he did call me out twice. I gave him a question, and he questioned me on my question a couple times. So, you know, Max, he's going to try and set things as straight as he can. So when he questioned me on my questions, it kind of got me on my heels a bit. But the good thing is, it shows that all of us here, all of us here, we are in the same arena where we're really coming to understand things, or we do understand things, and we're not just running in blind or acting emotionally. We're looking at things and reasoning them, and that's the important part. So I'm glad Max came on, and he had a few points to make there. Let me see a few comments here. Okay, let's see. All right, so we'll go on to the next thing Max talked about, which was deflation. So savings is good if you know the stores of value to actually put your savings in.
Yeah, absolutely. I mean, the savings is the key to capitalism, and it's the key to economic, uh, really freedom. And so that's fine. Savings is fine. It's just that the instrument of savings. I remember 20 years ago, my mom was getting 4.5, 5% on her checking, on her cash money market funds, and she just watched that rate go down to zero, and her monthly income got cut in half, and she just couldn't figure it out, like, why is this? And she didn't know how to respond either. She was just didn't know what to do. And this is a crime, that this was essentially trillions of dollars was moved from saving accounts that were yielding 4 or 5% into the pockets of speculators and hedge fund operators and crooks on Wall Street, with the help of the central bank, because there's no economic justification for it.
Okay, so made quite a few more points there, but in a low to zero rate environment, which is really hiding real negative rates. It's really hiding negative real rates. Savers saving in traditional savings accounts in banks are getting wiped out as far as your purchasing power. Nominally, you still have that same amount, but purchasing power wise, it is going down, or going to go down. So savings is the cornerstone of capitalism. I mean, yes, we can take out a loan, debt financing, things like that, but as far as traditionally, organically, savings has always been the cornerstone to capitalism. So you save, you build, you create, you grow organically. In this current environment, minus the bug, interest rates are stripping away growth and even removing the value, the amount of your savings, through you losing your purchasing power, and we're seeing money going into places that maybe if a if a true if a true market was really going on, were really going on, money would be flowing in other places to develop things that can really help the economy, that can really help the country, so to say, and you will really see what people want. People should be telling the markets what they want, not the market telling people what they should have. And I think this is it's a pretty dangerous place, and it's where we are right now. So this is where the instrument, the vehicle to carry your savings, your store of wealth, is critically important. I personally cannot go on the record to say Bitcoin is a store of value. I have my own opinions on that both ways. But I will absolutely, without hesitation, say that a store of value, a wealth preservation vehicle, systemic wealth insurance vehicle, is what gold and silver are. That is one of the things gold and silver are. Okay, so moving on to another thing Max had to say. Let me take a quick look at some comments here. Okay, Seymour Rivers, thank you. Okay, Vincent's got it covered. Thank you, Vincent. So we'll move on. Next, Max Keiser clip, globalization. Globalization will revert to regionalization or maybe even localization.
Yeah, regionalization, localization, mercantilism, right? So countries won't be globalized to the extent, because we were in an era, remember, where people and corporations could be taxed in one country, they could live in a different country, they could have a multi-global, a globalized life, and effectively don't not pay taxes, and have the best of everything. And but that has come apart now, and so I think that we're going to go away from that model, and it's also facilitated by something like Bitcoin that is unconfiscatable, it's immutable, it's censorship resistant. You can't block a transaction. Nobody has the ability to kill a transaction. And so it's easier for a local economy to sustain itself.
Okay, so let me get to that next points here. Here's the thing: for people that are thinking, and this is going to be a little bit controversial, but it's okay. We can always discuss it, right? So for people that are thinking we're going to go back to gold and silver as barter, and we're talking about this whole Mad Max type scenario, right? If it does go this way, it can only be temporary, and it can only be temporary, and it can only be local, which is kind of what Max is talking about here. It's simply not efficient to be used. I'm talking about physical gold and silver as barter instruments. It's not efficient to be used globally unless there is a way to go digital with your gold and silver where you can transfer ownership. Now, nothing wrong with keeping it in physical coin and bar form. I mean, that's your store of wealth. You want to do that. But if we're talking about, let's say, we're going to use it for barter trade in a local area, perhaps. But that local area has to reach out further. You're not going to find everything you need, let's say, at a farmer's market or things like that. So you need to expand out a bit. And so if we're thinking of the Mad Max scenario where we're going to be using gold and silver, it could be, but it would be a temporary thing. It can't go on forever. It would be a temporary thing, and a new monetary system would come in. So I mean, I'll leave that for you guys to discuss. I mean, it's a bit controversial. I understand that, but I'm just saying for me, if I do have to use it in a Mad Max type scenario, I'm also understanding that it's going to be a local thing, a very very local thing. I can't expand regionally or globally if we're looking at that type of scenario using our gold and silver for barter trade. We're going to need something that can transact, and that's all I'm saying. We're going to need a way, if we are looking at gold and silver to be monetary instruments. We're going to need a way for it to transact again. So local economies will need to fill the void, but we also need to be able to transact, and that's my point. definitely have gold and silver. I'm all in on that all the way. Um, you know, if things really go bad, you definitely want to have it. But as far as, the whole barter trade thing, I think, if it gets to that point, yes, you know, it it is an instrument you could use, but locally, um, locally within your own home base surrounding area, it would be difficult to use regionally or globally. So that's all I'm saying. So okay, moving on before you guys start throwing some tomatoes and eggs my way. Don't worry, I'm on board with you guys. Don't worry about that. So let me take a look at some of the comments here. Um, okay, all right, you guys are doing fine. I see a lot of you guys are talking about crypto. If you talk to Max about crypto, he will tell you stay away from altcoins. It's just Bitcoin and nothing else. Um, so it's. But all you guys talking crypto, I just want to ask you guys: if the Fed does go central bank digital currency, what are you going to do? What are you going to do with your Ripple? What are you going to do with your Zcash or all these other things? What are you going to do? And I even asked Max that, and the way I took it, he kind of avoided that question. So, all of you guys who are talking all these other types of crypto, what are you going to do when central banks go central bank digital currency? It's a legit question, right? Okay, so moving on. Um, let's see. So we got through those. What I want to do now is let me see here. Yeah, I mean, I'm just curious. What are you guys going to do when the Fed goes central bank digital currency? So anyway, I'll leave that for you guys to discuss. What I want to talk about now is some pretty rich guys who have moved over into gold, and these are billionaires who've made their way into gold. And it all started off with this article I came across October 4th, where super rich investors buy gold and they buy it by the ton. And this is something that we've been telling you folks as well before, where people are coming in, they're buying gold, they're buying silver, and they're not playing. They are really buying it and taking up positions. They're not stacking, they are taking up positions and holding. A lot of big money came in, still coming in, and picking up gold and silver. Super rich investors buy gold by the ton. The world's wealthiest people have responded to economic worries by buying gold by the bar and sometimes by the ton, and by moving assets out of the financial system. Bankers catering to the very rich said, this was a couple of weeks ago. And this is something we see, this is something we know. I think all of you out there are pretty familiar with this. Fears of a double dip downturn have boosted the appetite for physical bullion as well as for mining company shares and exchange traded funds, says a UBS executive. They don't only buy ETFs or futures, they buy physical gold. Okay, they buy physical gold, said Stadler, who runs the Swiss bank services for clients with assets of at least 50 million to invest. So even though all the time we're seeing, financial news networks talking about ETFs, people are buying physical gold. Okay, so don't get discouraged. It is happening. So UBS is recommending top tier clients hold 7 to 10% of their assets in precious metals like gold, which is on course for its 10th consecutive yearly gain and traded at around 13, 14, 50 an ounce Monday. Whoa, when was this? When did I come across this thing? Oh, this is 2010. Why did I just come across it? Nonetheless, it's still what we're seeing. Guys are coming back into it. So those same things that happened back then with all the QE and all of those things, which are happening again, we are seeing people doing the same things again. So even though this is a dated article, the same things are happening again. So we had a clear example of a couple buying over a ton of gold and carrying it to another place, Stadler said. And this is true. We do see people who are buying a lot and then they're sending it over. They're shipping it over. They want to put it in a place that has a little bit of a more favorable jurisdiction, a place that is a bit less chaotic, maybe a little bit less prone to chaos or perceived chaos on the way. So it actually, this is more interesting now that I know it's 10 years old, because the same things are happening again. So this again, it caught my eye where super rich investors buy gold by the ton. And so I did take a look into it. And hang on, let me get here. So I did take a look into it, and then I found, other faces who are getting into bullion right now, and some ETFs, some mining, and of course some physical. So I want to get into that. I'll take a look at some of the comments here first. Hang on, just take a quick look at some comments. So, M Bellinger, again, thank you. I will trade my cryptos equal as my silver and gold, property, cars, RVs, etc. You know what? That it's good. It's good that you're doing that. A lot of us, and when I first got into silver, all I was looking at was silver. I didn't look at gold. I didn't look at anything else. Um, Strictly silver, nothing else. And then you sort of realize, you know, you should be, or I should be looking at other things as well, and not be so boxed into just one thing, because you don't know which way things are going to go. And so yeah, had to open up to gold and other things, and you're there. You completely get it. You completely understand that, and it's good to see. It's really good to see. So thank you for your comment, and of course your super chat donation. Appreciate that. Thank you for your support. Let me take a look at a few more comments. Polynesian Pip. Whoa. Have a silver eagle on me. Appreciate it. Eagles are getting expensive, man. Thank you for that. Really do appreciate it, and appreciate your support. You're one of the guys who are always here, and you always have a lot of good comments to help people out. So we appreciate that. Thank you very much. Um, Aloha to you, my man. Thank you. Let's see what else we have out there. Let's see. Um, let's see what else is out there. Sorry, guys. Uh, okay. Yeah. Thank you. Appreciate that, Polynesian Pip. So let me move on a bit. Let me see where I'm at right now. So okay, so that was an article about super rich getting into gold, and they're buying it by the ton. And my mistake, which actually was a good mistake, I thought it was a recent article, but it was actually 10 years old. But the interesting thing again is guys are doing the same things that they did back then. So I think we're seeing that same flight to safety, that safe haven back then, and we're seeing it, absolutely seeing it again today. So let's take a look at the super rich, or the billionaires who are getting into precious metals. So we'll start with Najib Sawiris, an Egyptian billionaire businessman. Sawiris is chairman of Weather Investments parent company and chairman of the CEO, or chairman and CEO of Oroscom Telecom Holding. On April 30th, 2018, Egyptian billionaire Najib Sawiris is taking action. He put half of his 5.7 billion net worth into gold. Okay, half. So and this is what you're going to kind of see consistently, where a lot of guys, they say 5%, 10% of your portfolio in gold or precious metals. You're going to see these guys, these billionaires, they do more than that. In this case, 50%. In other cases, you're going to see they're putting 20%. So when we hear 10% on, news networks or things like that, what the very wealthy are doing, they are putting more than just that 5 to 10%. And you're going to see it. So he said in an interview that he believes gold prices will rally further, reaching 1,800. So again, this was in 2018 per ounce, from just above 1,300 now, while overvalued stock markets crash. So back then, he already saw stock markets were overvalued, and he already saw that this was going to push up the price of gold.
Even people now, they reduce the interest rate, but people are not buying. People are scared to buy anything now. Everybody's willing to risk cash. Even gold, I'm the largest investor in gold. Even gold shares are going down because people are selling these shares to cover margin calls,
Would you be a buyer of gold at these levels? We've often talked about the proportion of your wealth exposure in gold. Are you adding to that at the moment? Give me your take on the gold situation.
Yes, I am, because I believe that when this crisis, when people are done covering their margin calls, it's going to go up. And what's happening now, even refineries, for example, are not able to work 100% of their capacity. Take the refineries in Switzerland, for example. Their main workforce is from Italy. So they're not traveling anymore. So the refineries also will start losing in production, and then it means that you will have a shortage of physical gold. So I'm still a buyer, and I'm still increasing my position.
Okay, so what he has to say is they reduced the interest rate, but people are not buying. We're seeing that, right? Money being thrown all over the place, but people are still uncertain about the economy, so they're hanging on to whatever relief that they're getting. Businesses, without consumption going on, businesses, they're just trying to stay afloat. And again, we're seeing the Fed giving them relief as well. So it's kind of like everything is on ice, so to speak. A lot of things are on ice, but in different parts of the world, that ice is thawed and economies are starting to move again. I can tell you from in Singapore, we've been getting days now where there are zero new viruses coming on, zero, and economy is opening up. It's been opening up for the past few months, and it looks like it's ready to take the next step. And so it's just different in different parts of the world. But they reduced rates and people are not buying. They're holding on to cash. They don't know exactly what to do with it yet. Gold is going down to cover margin calls. The price, we saw that went down back a few months ago. Guys were trying to cover margin calls. But he was adding to his gold position as all this was happening. And when people are done covering margin calls, the gold price will go up. I think we're going to see that. I wouldn't argue with Najib. He's a smart guy. He knows what he's talking about. And refineries were running in a limited capacity earlier this year. We saw that. And gold was not as readily available. We all saw that, right? It's at least two things that come into play. It's the production side, the price side, the supply side, the demand side. I mean, you just don't know. If gold price goes down or silver price goes down, but you can't get supply, what does that mean? You're going to have a low spot price, and when you try to buy it, you're going to see the premium is going to be a bit higher. We saw that already. So how easily the physical market can disconnect from the spot price or paper price market. These two can very easily disconnect at the drop of a hat. And so this is why sometimes you need to decide, do you want to buy on the dip, or do you want to buy what's on hand and just go ahead and take what you can when you can. So those are some things that that Najib had to say. And what was interesting was there were some critics to what he had to say, and I'll play that clip for you.
All right, everybody, we want you to meet a guy named Najib Sawiris. He's an Egyptian multi-billionaire. He's decided to put half of his $5 billion fortune into cold, hard gold. Is that really a strategy for building sustained wealth? Let's bring in a guy who would know. Josh Jelinski is president of the Jelinski Advisory Group, and give us a sense right now of where you stand on something like Najib's theory that half of his money, all of it, should go into gold.
Yeah, 50% is a little much. 10 to 20%, maybe 50%. To make a move like that, you have to have kahunas and conviction, which this man has no short supply of both. But I don't think it's a good financial planning move.
Well, I want our viewers to look right now. Even as the Dow and the NASDAQ and the S&P are pretty much hitting session lows, gold is not spiking higher. It's not a flight to quality at the moment.
No.
Okay. I know a lot of you guys are probably steaming out there a bit, but the thing is, what analysts miss, or maybe even sometimes mislead with, is what wealthy people will honestly and candidly tell you. Okay, this is what they tell you. This is what they tell me. When I speak to them, what they will tell me is there's a time to grow your wealth and there's a time to protect your wealth. Okay, and this is what either people miss or don't understand, or sometimes do not care to understand. And it's not my words. This is a lot of times what very wealthy people will tell me. They say, "Hey, there's a time to make your wealth, and there's a time to protect it. There's a time to make money. There's a time to protect it. And we're seeing guys who are moving over more into that protection, where you have guys who are telling you still 5 to 10% of portfolios. You have the very wealthy moving up beyond 10, 15, 20%. And Ajit says he's at 50%. In Gregor Gregerson's case, I believe it's 70% in silver. So it really depends on who you talk to. But for me, guys that have done very well, they are above 10%, much more than whatever financial news networks are saying. Anyway, nonetheless, it is a problem that the Fed's created, and what these analysts do know, what we know is the Fed is bailing out the country right now. It's bailing out the markets. And it's not just the U.S. This is globally, all over the world. You can find the same types of news if you look at European central banks, and wherever you go, you're going to find the same types of news. But let's just call it what it is. The Fed is bailing out the company right now. The economy is on ice. It is on ice right now. The quicker we understand that, the quicker we can all come to terms with what we should be doing. Should we be growing our wealth, or should we be protecting our wealth? And as I said before, all cash, it does have an expiration date on it. So as Najib was saying, he's into cash, or other guys were saying that they're holding cash. It's good. It's good because it gives you the flexibility to move wherever you need to move. But I for one, do believe cash does have an expiration date on it. And sometimes you hear people say even cash is trash. Take a look at Jeffrey Goodluck, investor, business person. He is the founder of Double Line Capital, an investment firm. He was formerly the head of the 9.3 billion TCW Total Return Bond Fund. So this was an article that I pulled up from Jeffrey Goodluck. Okay, so a bit more recent. October 12th, 2020. All right, so we're back to the future now. Stocks are going to crack pretty hard, and here's what one billionaire says investors should do to prepare. Within 18 months, it's going to crack pretty hard. I think that you want to be avoiding it for the time being. When the next big meltdown happens, I think the U.S. is going to be the worst performing market, actually, and that'll have a lot to do with the dollar weakening. That's Double Line Capital billionaire Jeffrey Goodluck, who has been hailed as the bond king, sharing his bearish thoughts on the stock market in a recent Real Vision interview. I actually think owning 25% gold isn't crazy right now, nor do I think owning 25% cash is crazy, he said, noting that the two risk-averse positions make up half of the permanent portfolio concept alongside 25% in stocks, 25% in bonds. So what he's saying is 25% gold, 25% cash, and that's kind of what we just said. Cash is good right now. It does give you the flexibility, but there is a day where cash does have an expiration date on it, and 25% gold. So he's above that 5 to 10% of what people are telling you. So one billionaire, Najib, 50%, another billionaire, 25%. So they are above that level. So it's a good investment right now. Goodluck said, I think we have such a potential tail risk of outcomes, such a dispersed potential outcome, that you really need to have this barbelled asset allocation concept. From my understanding, the barbell allocation is where we are today and where we are going to be tomorrow. And this is what we talk about, that transition, right? We're going to have to move from here to there. And this is something that cash is maybe good on this end of the barbell, but you also want to have gold, because gold is going to take you to the other side of that barbell. Barbell meaning, if you imagine a barbell, you have two ends that are larger, and then you have that skinnier end, the where you handle it, where you grip it. That's the transition part. So he went on to paint a bleak picture for the economy, even as many Wall Street pros call for a V-shaped recovery in the U.S. I don't think people fully understand how many business closures there's going to be in the next few months, he said, adding that he's shocked. He's shocked at how many empty storefronts are popping up. There's going to be a lot more than that. I think it's going to really accelerate. I think there's going to be real problems in the winter time here. I, for one, am a bit worried about the winter. So let's see something that Jeffrey Goodluck had to say. It's about a 3-minute clip, so hang on.
I just want to get your views, Jeffrey, on what's transpired in the markets in the last few months and as it relates to the economy as well and the Fed dependency here. How do you think about the Fed's role in the overall economy and the markets?
Well, the Fed has decided that they want to pull out all the stops to reduce market and economic volatility. I think that was what really got them going in the later part of March and early part of April, was that markets, not just the stock market, but commodity markets, junk bond markets, interest rate markets, were experiencing really persistent and elevated volatility. And they just kept throwing things at it to make the volatility stop. And of course, when investors use the word volatility, what they really mean is down. Prices going down a lot. And the Fed came in because there was a total seize up in really the credit market system around the world, but of course, relative to the Fed in the United States. I've been in the market for 35 years, and I've seen all kinds of crises, including I was right at the front lines during 2008, 2009, during the global financial crisis, which really hit the securitized asset sector. And what we experienced in the last part of March was far worse in terms of market conditions in the investment grade corporate bond market, in the emerging markets, certainly in the junk bond markets, far worse than the very worst day in March of 2009. Literally, in 2009, you could get a bid. You didn't like it. The prices were in a free fall from the day before on the really ugly days of maybe 10 or 15% price moves to the downside in a single day. But in March of 2020 here, there was no bid. There were actually situations in large swaths of the fixed income market where you simply could not sell assets. And that led to what looked like was going to be some very substantial bankruptcies in some of the leveraged pools like mortgage-related REITs and other leverage types of investments. And the Fed just figured that at desperate times, they required desperate measures, and they went all the way into buying corporate bonds, which, as I've said in my webcasts, is not allowed under the Federal Reserve Act of 1913. And they did not buy corporate bonds during the global financial crisis, even though I know for a fact they talked a lot about it because I know people that were inside the Fed at those discussions. But what they're doing is really a bridge further than they've ever gone before, where they're not even following their own charter, which means that the Fed could go even further in violation of the Federal Reserve Act of 1913 if they really feel like, we go into another economic move down. So the Fed has propped up the economy with just the most incredible fiscal lending that they've ever contemplated. And of course, I think the listeners know that the quantitative easing that the Fed has done since March is greater than all of the quantitative easing that they started back, in the global financial crisis. It was more in just 3 or 4 weeks than that entire program that was laid out over a multi-year framework.
Okay, so according to Goodluck, Fed is doing everything to reduce market volatility losses. We know that, right? They're throwing money all over the place, and even though they tell you, we've opened this window, that window, we've opened this whatever it may be, it's just printing. That's it. That's the only thing they have. They will print, or they will stroke some digits and fill up an account with digital I don't know what you want to call it anymore. It's a representation of money. And that's all they have. That's all the Fed has right now. They're doing everything they can to reduce market volatility and losses. Gunluck reminds us that credit markets seized all over the world. Okay, they seized up all over the world. What we had in the past March was far worse than the worst day of 2009. So that's to put things into perspective. What happened then was far worse than anything else that's happened maybe ever, or happened at least back in the last Great Recession, 2008, 2009 era. There were no bids in March of 2020. No one wanted to buy. Nobody wanted to buy anything at that point, but we were buying. We were buying gold and silver, right? We were buying that. And bankruptcies were imminent in the leveraged pools. So a lot of money was tied up in a lot of these products. And, they went in there for leverage, and they were all starting to unravel very, very severely, which is in part why we had these credit markets seizing up all over the world. Also, according to Gunlock, the Fed bought corporate bonds, which is not allowed. That's still debatable whether they are allowed to do that. Fed is not following their own charter. Fed did more in a few weeks than they did for the whole 2008 crisis and all the QE programs combined. This should tell you the dire situation unfolding right before our eyes. So I'll take a look at a few comments here. Danny the plumber, cash is good to have in a depression, or if a depression sets in and people sell their assets cheap. That's good. I do think, it's a very real possibility you're going to see guys who are going to try and sell their assets off cheap. But I also think during that time, they are not going to be selling it for fiat. They are going to be wanting to sell it for something else, because I do believe when we get to that point, fiat is already widely known to be in big trouble. So I don't think they may be selling it for fiat, which is why I go back to saying I do think there's an expiration date on cash. I think they're gonna want to maybe sell their house, their business, and they may not want that cash. They probably are going to be, or maybe looking at your gold and silver. So if you do have that gold and silver, you're going to be able to use it. It's my opinion. You're going to be able to use it for these things, whether it's real estate, whether it's for business, whatever it is, you are going to be able to use it. In that instance, yes, because by that point in time, I do think cash is already in trouble. So I don't think somebody's going to be selling their home, which is already going down in price, for cash. I don't think they're going to want to do it, even though cash is hyperinflating, let's say, and they think they're going to get more value for their home because it's going to hyperinflate. Still, nobody's going to want to hang on to their cash. Nobody's going to want to trade for it because they know that $50 today might only be $5 tomorrow. So it's something to consider. It's a great point, though. I do agree with what you're saying, though. So it's a great point. Let me see what else is out there. Let's see. Okay, sorry, I was just going through these comments real quick. Let's see. Sorry, guys. Let me see what else is out there. You guys talking about flat Earth, huh? Okay, we'll save that for another time. Maybe. Let me see what else is out there. Okay, VK Travelog, exactly. You need to be your own bank, which is why we are trying to help people understand that, which is why we're glad that book by Aon Schmidt was written, which is why we want people to understand that being your own bank is an important thing right now. There is going to be a currency crisis. I think we all know that already. And so we need to find other ways to have financial instruments that can save, that can transfer our wealth, that can store our wealth, that can aid us in systemic wealth protection. We need to find these things. Okay, and gold and silver being one of them, or two of them, I should say. So it's a good comment there. See what else is out there. Sorry about that, guys. Okay, let me all right, let me move on. So next up, Sam Zell, billionaire businessman and philanthropist, a former lawyer. Zell is the founder and chairman of Equity Group Investments, a private investment firm founded 50 years ago in 1968. And the company invests, okay, so this is obviously a couple years old when it was written, this bio. The company invests opportunistically across industries and geographies and throughout the capital structure. So Sam Zell, this is just a short clip on what he had to say.
The amount of capital being put into new gold mines is almost non-existent. And all the money is being used to buy up rivals. Go back to supply and demand. the supply is shrinking, and that's going to have a positive impact on price.
So does that make gold a good investment? I mean, gold mining a good investment for you?
For the first time in my life, I bought some gold because I think it's a good hedge.
Okay, Sam Zell, billionaire, the other billionaire. Capital being put into gold mines not existent. And again, this is why mining stocks have been doing pretty darn well lately. They've operated with gold and silver flat and sideways and down for such a long time. And now with gold and silver prices going up and learning how to lower their costs of operations, they're doing very, very well. And this is why guys like Buffett they see this. They moved into mining stocks. This is why guys like Sam Zell, they're moving into things like mining stocks. First time he's bought gold in his life, he says. So, again, this is pretty significant. Buffett does not like gold. He's on the record as, one who particularly doesn't like gold. In fact, if anything, he liked silver. He took up a big silver position. But he's made a U-turn. He's come back to gold. Sam Zell, another billionaire, he first time in his life, he's bought gold. So these guys, they understand what's going on, and they can put the puzzle together a lot of times a lot quicker than most of us can. And they've already put the puzzles or the pieces of that puzzle in place. They see the picture and they're acting on it. They know what to do and they're doing it. So gold supply is shrinking, and part of that might have been because of the peak gold argument. I'm sure some of us have heard this before, where because gold and silver has been sideways and low for such a long time, about a decade or so, they felt they were reaching peak gold because it was costing more to get the gold out of the ground than to actually make money on it. So sort of like peak oil. So granted, now with higher gold prices, it's going to help push back this peak gold argument as it becomes more profitable to mine gold and selling gold at higher prices with lower production costs. So Sam has bought gold for the first time and calls it a good hedge. So that's coming from Sam Zell. Next up, Stanley Druckenmiller, multi-billionaire hedge fund manager and philanthropist. He is the former chairman and president of Duquesne Capital, which he founded in 1981. He closed the fund in August of 2010 because he felt unable to deliver high returns to his clients. And at that time of closing, Duquesne Capital had over $12 billion in assets. So why did he feel unable to return to give his clients high returns? You go back to that time period, we were again in low to zero interest rates. So Druckenmiller at that time, he felt it was just a bit tough to give clients returns. Okay, so this article here, 2020, June 8th, 2020, billionaire investor Stanley Druckenmiller said he's been humbled by markets after missing out on historic stock rally. And this is part of it, because a lot of us, we go into things like silver and gold, and it's a long-term investment. It can be slow moving at times, and we see the market really moving, or we see things like crypto really moving, and we get humbled. We get humbled by these other things moving a lot quicker, real estate, things like that, moving a lot quicker than our gold and silver. But some of us, we bought it as an investment. Some of us, we just simply bought it as insurance. So we are okay with it. So Stanley Druckenmiller has been humbled by markets following stock's historic 50-day rally. This is what he told CNBC a few weeks back. I've been humbled many times in my career, and I'm sure I'll be many more times in the future. And the last 3 weeks certainly fits that category. Again, this is pertaining to that stock market rise. Druckenmiller said last month that the stock market's rise or risk-reward profile was one of the worst he'd ever seen, and he discounted the Fed's ability to save the economy. In other words, the Fed's intervention, throwing money all over the place. Now, Druckenmiller says he's underestimated the Fed and is up only 3% after the market's 40% rally. So let me see if there was anything else in here. Okay, so basically he's talking about how he's been humbled because, yes, he did go into gold and he's missed a few market rallies. So here's another article on Druckenmiller. And this was back in 2017 now at that time. And the fundamentals still hold true. And what he said back then is he he's the hedge fund titan who dumped his holdings of gold before Donald Trump was elected president. So I think if we go back and recall, we saw gold rising, and then we knew who the winner was, and then gold dropped. So this was back then, and how he saw it tied into a presidential election. But he's back, and now he's bullish on metal, and that may be a telling piece of news for investors making bets that the Dow Jones, the S&P 500 index, and the Nasdaq will continue to maintain cruising altitude in record territory. So in a Bloomberg interview, he said he dipped back into gold in December and January. This is back in 2017. His rationale is fairly simple. I wanted to own some currency, and no country wants its currency to strengthen. He continued, gold was down a lot. Gold was down a lot, so I bought it. Okay, so let me play a clip on this. Hang on here.
I think the merging of the Fed and the Treasury, which is effectively what's happening during COVID, sets a precedent that, well, we've never seen since the Fed got their independence. And it's obviously creating a massive raging mania in financial assets. And as you just pointed out, Joe, it has not spilled over to Main Street. I would just say that I hear a lot of people on the air applauding Jay Powell, saying he saved the world. And I do think he did a great job in March. I think the follow-up's been excessive. And I just want all you guys cheering him on to remember the maestro in 2005 and how that worked out. Look, everybody loves a party. Jeff loves a party. Kwame loves a party. I love a party. I assume you guys love a party. But inevitably, after a big party, there's a hangover. And right now, we're in an absolute raging mania. We've got commentators on your network encouraging companies to do stock splits. Companies then go up 50%, 30, 40%, big market cap companies on stock splits. As Andrew pointed out early in your show today, that creates no value, but the stocks go up. Look, Joe, I have no clue where the market's going to go in the near term. I don't know whether it's going to go up 10%. I don't know whether it's going to go down 10%. But I just want to remind people that there is no valuation support because we dropped 10%. That hasn't mattered because we're so far outside of the valuation realm with the Fed doing what they're doing. That doesn't matter. But I would say.
Okay, so let me speed it up a bit. Druckenmiller, no truth to the market. Market disconnected. Too much uncertainty. Absolutely, we're all seeing that. Yes, he has been humbled. In his own words, he's been humbled by missing the markets and missing the markets before. So why did he make the big move into gold? He's on the record per Bloomberg in 2017 saying, I wanted to own some currency, and no country wants its currency to strengthen. He continued, gold was down a lot, so I bought it. Not putting words in his mouth, but I would read this as gold is money. I would read it as gold is money. In other searches, Druckenmiller says the Fed has borrowed from future consumption more than ever before, and Druckenmiller reportedly holds 20% of his entire portfolio in gold. So another billionaire, multi-billionaire, double over that 10%, 5 to 10% allocation of gold that we often hear about. They are far more into gold than we might have thought. Okay, moving on. David Einhorn, investor, hedge fund manager, and philanthropist. He's the founder and president of Greenlight Capital, a long, short, value-oriented hedge fund. So let's take a look at this article real quick. It's from Kitco. Let me resize this a bit so we can all see it. Or maybe so I can see it. Billionaire investors continue to tout the benefits of gold, with David Einhorn, founder of Greenlight Capital, highlighting the yellow metal is one of his firm's top 10 positions for 2020. We begin 2020 with a portfolio that continues to be concentrated in our best ideas. We currently have 96% of capital in our top 10 longs and 40% of capital in our top 10 shorts. This is what he said. So looking at gold, Einhorn said that the precious metal is the firm's hedge against growing government debt and ultra-loose monetary policy from the Federal Reserve. The bipartisan consensus is that deficits don't matter. And we see this, right? They just continue to add on debt after debt after debt, whatever it is, they just keep adding it on. And it implies we can always print our way out of trouble, he said. All told, we can count on aggressive fiscal and monetary policies in both good times and bad. Gold continues to be a hedge in our portfolio against adverse outcomes related to these policies. So again, this is one reason why, or probably the biggest reason why Einhorn is into gold. Okay, so moving on, we take a look. Ray Dalio, billionaire hedge fund manager and philanthropist who has served as co-chief investment officer of the Bridgewater Associates since '85. He co-founded or founded Bridgewater in '75 in New York, and within 10 years, it was infused with $5 million investment from the World Bank's retirement fund. He is on the record for saying things like cash is trash. This is an article from Markets Insider, and as recent as April, where he said it this year. Still views cash as a bad investment even after the bug sell-off. I still think cash is trash relative to other alternatives, particularly those that will retain their value or increase their value during reflationary periods. Okay, so this is a few things he had to say. Let me move on. I'll just play you a clip of what he had to say.
Right now, that you have to be in the market full on. And so the question is whether everybody jumps on the train, everybody gets in full on, and then the problem arises that you're talking about.
Most likely.
But then the question is when do you jump off the train?
But also the question is, what do you jump into when you jump off the train? And the issue is you can't jump into cash. Cash is trash, okay? Cash is that they're going to, because they're going to print money. What do? You get out. Okay, so cash is not going to be
So what
good.
do you do?
So what you have to do is you have to have a well-diversified portfolio. And first of all, you have to be global, and you have to have balance. And I think, I don't want to grab, the headline's going to be, again, anyway, is I think that you have to have a certain amount of gold in your portfolio, or you have to have something that's hard. There are three monetary systems that happen. The first is, in the old days, it had intrinsic value. You'd carry around gold coins. Then we come up with the idea of banks or even central banks. And what they do is they create certificates, we call notes, that are claims on those things. And we print many more certificates than there is money in the bank. And then that's a linked system. And we did that, and we broke that in 1971. Then you have a fiat monetary system, which means that you can print whatever amount of money you want, and you can put that, and that's what governments do. So we're in that part of the cycle, bigger picture, so that when you think about things, the depreciation of the exchange rate and the printing of money, I think over the next few years is going to be the biggest.
If you want to buy gold, do you buy Bitcoin?
No, there are two purposes of money: a medium of exchange and a storehold of wealth. And Bitcoin is not effective in either of those cases now.
Store of wealth?
No, because first
potentially.
Of all, it's too volatile. Because of the volatility, you can't go next to it. Someday when it, I would say Libra or something which has more stable value, has got more potential. But also, who's going to...
Okay, so Dalio, you have to be well diversified and you have to be global. Sorry to cut that off a bit, but you have to have gold or something that's hard. So, Dalio sees that where, cash is trash. I read it as I've said, cash has a expiration date. And so let's move on. We've had three monetary systems: physical gold. We've had that. Gold held in banks with certificates or paper notes. We've had that, which were supposed to be backed by gold, could be used to claim the gold. And currently we have a fiat system where nothing needs to be backed or nothing is anchoring the currency. Therefore, as much currency as they want can be printed. So this is where we are now with in the system, and this is why things are going to change. He doesn't see Bitcoin as a store of value, things or anything like that. And he says, if anything, he'd be looking at Libra, and which Libra probably has probably would get a quicker adoption than Bitcoin ever had. And that being because you look at social media today. Um, if these guys just decided to all get together, that would be it. It would be Libra. And this is why you have a lot of members of Congress right now who are trying to hold back Libra and regulate it as hard as they can to give it more hurdles to push it back further. And we're seeing this. Central banks they are aware, and as Max Keiser said, they're afraid. I think in some cases they are afraid of what's going on. So moving on, grand finale of the gold guys. Lord Jacob Rothschild, British peer and investment banker and a member of the prominent Rothschild banking family. I saw you guys talking about Rothschild earlier. I didn't want to say anything at that time, but okay, so here he is. Let's take a look at a few things that he says or he does. And this is interesting because it does come from a crypto, I'll just call it a crypto, a pro crypto website, Cointelegraph. So Rothschild, this is 2016 now, he dumps US dollar for gold and other currencies. And they, of course, throw in Bitcoin. This is the cryptocurrency website. So the Rothschilds family recently announced that they are moving out of the US dollar and global reserve currency into gold and other currencies. I think I want you to notice, even though these articles are dated 2016, 2017, 2018, it goes to show you that these very wealthy people, they understood, and as I said, they understood early on where they put the pieces of the puzzle together and they saw the big picture in a lot of cases earlier than some of us or most of us. So some believe that the global economic climate is getting worse by the day with the collapse of Cyprus, Greece. This was at that time frame now, remember. So just to say that the economic climate is getting worse. It was getting worse since then. These are trade winds or economic tea leaves to be read. Okay, so that's the main point. We need to read these things and understand what they mean. So do you believe what the mainstream media's eyes and ears are telling you? I say get all the information from all sides. And that's a good point. We need to see all sides to make an educated decision that will affect your financial future, because it looks like the future is about to get affected in a major way. Okay, which is true. So let me move on to the last article here. This one is it's in a world of its own. Rothschilds and gold. This is from rothschildarchive.org. So it might be interesting for you if you want to go ahead and take a look at it. It talks a lot about the Rothschilds. So the history of gold trading would be incomplete without the Rothschilds and the history of their world with or without gold. Beginning in 1809 and spanning almost 200 years, the trading, refining, and mining of gold have been important activities for business. Let's see. What I'll do is, I know we're running a bit later, so I'll put the link here, and you guys can go ahead and take a look at it on your own, and I'll just move down to the last portion of it. Okay. The gold fixing. This is what we hear all the time, right? Gold fixing. The fixing provides a recognized daily gold price that is used as a benchmark throughout world markets. For much of its life, it has been a restrained affair with 5 participants sending representatives to Rothschild's offices. Okay, so we're getting that. It's going to his office. From there, they telephoned their trading rooms and raised a small Union Jack when conferring with colleagues, and only when all the flags had been lowered could the gold price be fixed or agreed on. So the fixing was held at the Rothschild Bank offices from 1919 until 2004. So it's pretty interesting. You just had a small group of people getting on the phone with each other, putting up a flag to let them to let people know, hey, we're talking about what we want the gold price to be. And when they're ready, they go ahead and they take that flag down, and then they will set the gold price. It's a pretty interesting website. Go ahead and click on that link if if you can, or if you'd like to know more about it. So we're running a bit overtime here. So let me see what else is out here besides people talking about flat Earth. um, I don't know what to say about that. Anyway, gold. It's we're seeing more billionaires moving on into it, and again, guys are buying it, and they are moving into it in a big way. And but really, if you again, if you're waiting for the dip, that's one thing. But I can tell you guys, there's a lot of big money out there that's not necessarily waiting for the dip. They're just buying it as soon as it comes online, and so it's your choice. You know, you can wait for the dip, or you can buy it. As I said before, some people are buying to stack, and some people are buying to take a position. And it's a different world. I can tell you, it's a different world. Stacking is a different world from taking up a position. And you know, you got to do what fits you. You know, whatever fits you best, go ahead and do it. So again, a lot of big money's moving into it, and they are looking at they're not going to keep it with them. They are looking at storing it in various places. So it's the mindset is a bit different. So that's something that we got to kind of understand. So anyway, for various reasons at various times, there are reasons people move into gold. And again, I showed you a lot of these guys went into it, 2, 3, 4 years ago before the bug even happened. As I said, they already put the pieces of the puzzle together. Billionaires, millionaires, Wall Street, Main Street, and you out there, you all know there's a time to move into gold. There's a time to move into silver. But let's be clear about one thing. We all get the timing wrong. Okay. This is truth. Okay. We all get the timing wrong on when to move into gold, when to buy gold, when to sell gold. We all get it wrong. It's dynamic. It'll always change from that point in time where you made a decision. It pays. I'll just say this. It pays no purpose to be a pixel peeper looking at the price chart every 3-5 seconds. You will never buy at its lowest low nor sell at its highest highs. And I want you to find comfort in those words. It's not to discourage or demean. It's just to say that none of us ever get it right. The point being, if the fundamentals are there for you to buy it, go ahead. When you're comfortable with a price, go ahead and buy it. But try not to let yourself be so anchored to it that you're up 24/7 trying to find or project the lowest price or the highest high on when to buy or when to sell. We're never going to get it right. We will never get it right. So if you're comfortable to buy it, when you're ready, just go ahead and buy it. But don't try not to get too locked in to pixel peeping on a price chart or a spot price chart. So the takeaway here is to know that the sentiments on the markets on holding cash it's one of waning confidence right now. And when there's no confidence in the markets, central banks, money, people move into things like gold, like silver, to serve the purpose of being a store of value. So as the very wealthy people tell me, there's a time to create wealth and there's a time to protect your wealth. What's your outlook? And what vehicle are you going to put your currency in? It's an individual choice that only you can make. It's a choice only you can make. Let me take a look at a few comments, and then Jerry Lisby, buy. Yeah, I would. That's just me personally. Like I said, some people stack, some people take positions, and trying to guess the gold price. Yes, we want to buy it as low as we can. Yes, we want to sell it as high as we can. So all I'm saying is it's pretty much impossible to do. It's pretty much impossible to do. So just know the fundamentals of why you buy it, and find some and just know the fundamentals of why you're buying it, and you'll be fine. Some days you're gonna look at the price and feel terrible. Some days you're gonna look at the price and you're gonna be happy. And but stick to the fundamentals why you bought it. Let's see what else is out here. Let's see. One Royal Wolf, gold and silver for the win always. Yeah, I think so. And again, so if you are sitting on the fence, you're trying to decide, should I move into gold and silver? Is it the right time? I would say consider the supply side of things as well. And it's a determining factor that a lot of people don't consider. We only tend to look at price. We don't tend to look at the outlook or the supply side. Let's see, global nations. Yes, yes. Trash talking in the channel. We pretty much give you guys free reign here, but the point being, as I've always said, or I do say quite often, your comments out there are going to help a person decide if they should move into gold and silver or if they should not. They're looking at your comments, and you guys have the power more than I do to help persuade someone to move into gold and silver or to not move into gold and silver. And your comments matter. Okay. And so that's something I'd like, just keep in mind, pretty much we let you guys freely chat about whatever you want to chat about. But in the bigger picture, there are people out there who are still trying to decide, and they want to know why you got into gold, why you got into silver, or why you don't want to get into gold, or why you went into crypto instead. And your word is stronger than anything I say. So, you guys have a great opportunity to help people. And, I think that's pretty awesome. So if you can help someone, try and help them out, give them the reasons why you look at it or why you don't look at it. Okay. So, yeah. So, let's see what else is out there. Jack Parsons, cost averaging is the move. Yeah. We get some people, they ask, should you just take up a huge position, one shot and forget about it? Or do you just buy here, buy there, buy here, buy there? And I would go with what you're saying, because you give yourself the chance to cost average down. Because like I said, we never get it right. We never buy at the lowest low. We can never buy, or sell at the highest high. So cost averaging is a pretty decent strategy if you want to. If your main objective is to buy as low as you can. If you missed it, then you have the second chance to cost average. So it's a good strategy. Let's see. M. Bellinger, if you can't store 100 pounds of rice and grains, buy physical silver. That's true. Rice wouldn't last in my house, though. We'll eat, or I'll eat it up pretty quick there. But it's true. I think commodities, they're going to play a huge role. And I've also said this before. Commodities are what's real. They are what's real. Somebody might not want to take you fiat for that bag of rice, but they may take some silver for it. Or, because, I understand what you're saying. Silver will last, significantly a much longer time. But, when it comes to things that are real, guys are going to want money that's real, real money. So this is another problem fiat has down the road. So, keep in mind, you guys may not want fiat, and it's good to have that gold and silver again. So, with that, again, just, consider all sides. Everyone's polarized nowadays, but consider all sides, because that's the only thing that's going to help you to decide what's best for you, is if you understand what you like and what you don't like, and make a decision based on rationale rather than emotion. So, with that, try and be a blessing, not a burden. A lot of people are going to need a lot of help. We're already seeing it. And just talk to people and try and let them understand as much as about gold and silver. And, with that, I thank you guys for being here. And, remember, you guys have more strength than I do to help someone to understand. It's your comments that matter the most. And so we thank you for commenting and joining us today. You guys take care. I'll see you guys next week. And as always, saddle up for what's coming ahead and silver up as well. I'll see you guys. Take care of each other.